I'm going to do a follow-up on the stock market. In one of my previous videos, I noted that the Dow was within striking distance of making a higher high, and it followed through and completed that last week on Friday. The Dow closed at a higher high, so we've got a Dow theory non-confirmation. That's only step one, though. That doesn't automatically confirm that we have printed a final bear market bottom. The transports need to also make a higher high in order to confirm. So we're only halfway there at this point, but this market is not doing what it would normally do if we were still in a bear market. If we were in a bear market, I don't think the Dow would even be remotely close to making a higher intermediate high. And this is a classic example of what the vast majority of newsletter writers, market analysts, and so on do. They get on a trend, and then they just keep pushing the trend, and then most of them miss the turn when it comes. So the vast majority of traders have become conditioned to this bear market, and they are missing this warning sign that something may be changing. So they're just going to continue to publish the doom and gloom analysis that there's a major crash coming in the stock market any day now. I'm one of those traders that's generally a contrarian. So when things become too extreme on one side of the boat, then I generally like to go in the other direction. Very often that means I'm a little bit early. In this case, though, I started warning several weeks ago that the Dow was not behaving like I would expect it to behave during a bear market, and of course, most of the analysts just are just stuck in bear market mode. They've become conditioned by this bear trend for pretty much the duration of 2022. And like I said, they're missing this warning sign here that the bear may be over, for now anyway. I'll go over what I think is maybe likely to happen in 2023. I don't think it's going to get a whole lot easier, even if the bear market is over for now. But the transports need to confirm. So let me convert over to a chart of the transports. All right, so in order to get a Dow theory buy signal, the transports have to make a new closing high, which that means they're going to have to close above, let's just call it 15,200 right here. So at this pivot, at this peak, the transports were about 2.7% away from a new closing high. It doesn't actually have to print above this tail, but it does have to close above this closing high. So it's going to have to close above 15,200. We are currently in a very bullish period ahead of the Thanksgiving holiday and for a week or so afterwards. And generally, for the month of December, it tends to be a pretty bullish period. So there's definitely an opportunity here for the transports to confirm this. And if they do, if the transports close at a new closing high, then you're going to have to jettison the idea of stocks still being in a bear market, and you're going to have to ignore the people and they're going to be, the majority of them are just going to be stuck in this trend, and they're going to continue to predict major crash coming, major bear market, major recession. And I think all of those things are due, but I'm afraid that it's going to be a lot more difficult than what a lot of people are expecting. So let me go back to the Dow. All right, so actually I think I'm just going to use the S&P here, but this is kind of what I think is very likely to play out, that we're going to ultimately or eventually we're going to make a higher high in the S&P as well, go above this intermediate cycle top. I think the Dow is probably leading. The Dow might make a higher high but I'm not convinced that the S&P will. But I think it could produce just a very, very difficult market. So in a bear market, you don't generally make higher intermediate highs, but I'm not sure that the rally is going to be that there's going to be enough momentum for this to come back up and make a higher high. So we could have something like this that makes a higher intermediate high, convinces everybody that the bull market is resuming. People get bullish, they start to pile in, and then we come up a little short of making higher highs, and then the recession starts in earnest, especially if the CRB has or is bottoming, and we start to get a big surge in inflation again. $200 oil, I'm kind of on record as saying that during the next 3-year cycle, $200 oil is going to be a piece of cake. $100 silver is going to be a piece of cake during this period. And if inflation really starts to get run really hot, then that's going to start to pressure the stock market. It may come up short of making higher highs, and then the economy actually starts to roll over in earnest. I know there's a lot of analysts right now that are predicting a recession, but I'm just not seeing it at the moment. I live in Las Vegas. The casinos are still full. The restaurants are still full. We're not getting any negative prints on employment yet. So I think it's probably a little premature to anticipate a recession just yet. But if we do get a big spike in inflation here early next year, as the CRB is coming out of that 3-year cycle low, then that could be the fundamental driver to actually roll the economy over into recession, and that may start in the spring or summer of next year. And then we get this really difficult pattern where we're making higher intermediate highs, convinces everybody the bull market's back, and then we actually start to roll over into recession, and the market starts to price that in, and then we get a huge or very nasty bear market, and probably some kind of a crash that takes us down into the 4-year cycle low, which is actually going to be due in the spring of 2024. So I don't know that next year is going to be any easier than this past year. We want to make sure we don't make any big mistakes. I think the potential for trending moves, while there may be potential here in the stock market, it may come up short, but I think the potential for big trending moves is probably in the commodity market, certainly in the metals market, and I've been very bullish on that lately. And then once the energy market gets done churning sideways, it's still, we had a huge move over 2.5 years, and so we're just going to have some sideways churn to work that off. But once that's done, then I think oil is going to be headed to $200 at some point, probably by mid to late 23, maybe into 2024. So probably the best sectors for strong trending moves are going to be in commodities, although it may take a while yet before energy is ready to take off and give us that next big move higher.